Hello, traders. What we're going to see today is the put call ratio, which is a very reliable measure of the sentiment in the market. Now, this is a very rare signal that we got in December. And the last time we got it, what happened? So, in red is the put call ratio, which is smoothened out as a 10-day moving average. And in blue, you have the SPX. So what I'm going to show you right now is the put call ratio, how low it got in December. And if you look up, that exactly coincides with the top. This level was last seen right here in December of 21, which was the very top of the bull market and the start of the bear market. And when you do get this level of complacency, that means a major top is forming, and it's been a month and a half now since we've got this signal, and the market is clearly lower, which means we could be in a bear market. This alone doesn't tell you we're in a bear market, but there is a factor of other signals. But I'm only focusing on this right now. You can see that it's pretty reliable if you want to catch major tops. So, for example, the July 23 top came when the market was very complacent. The July 24 top, you can see, exactly coincides when we get complacency in the market. And now in December, well, not now, it's been a while, it exactly marked the top. The reverse is also true. You can see when this ratio spikes, you tend to, like that, caught this bottom here, and that spike caught the October 22 bottom. Here's another big bottom when the ratio spiked. Another spike in the ratio called this bottom here. And very recently, the when we had that Nikkei blow up, the market dropped, ratio spiked, and we had a bottom. So as of right now, the ratio is down here. So I'm expecting a further spike in the put call ratio, which would cause some panic and ruin the sentiment for the bulls. And that would be a good time to go long. Now, what's the catalyst? It could be anything. That's not the point. My bets are on something to do with bird flu, but it could be anything else. The point is that we're somewhere in the middle right now. We're not complacent anymore, that's for sure. But there's not panic either. So let's see which way it goes. If the market happens to break to new all-time highs, then we can see this ratio fall back down, which would make me bearish once again. So at least we need this ratio to go up here to these levels, these elevated levels, which have historically marked bottoms, like you can see here. So let's wait and see which way this plays out. But my bias is bearish right now. I am short the S&P as well as the Nasdaq, as opposed to the Dow. I think the Nasdaq will be the underperformer going forward. All right, thank you.